So how do we get to 40-50 by the end of next year, given that you're expecting perhaps a bit more softness and tech not leading?
Well, there's other areas. So I think that energy, where there's this expectation that you're going to have a weakness in energy profits, I think is going to be totally wrong. I mean, we're seeing this right now that in the last 6 months, the earnings estimates for the energy sector keep getting revised higher and higher, even though oil prices are falling. So, like, where's the magic there? And it's a lack of refining capacity. And if we do end up with oil prices rising, a bit because the economy is a little bit stronger and China reopens, then these companies soar.
Right.
So I think that's an area of strength that's probably underestimated. Tech, on the other hand, to the downside.
I didn't know this. I mean, folks, years ago, Credit Suisse was absolutely definitive on energy infrastructure in the United States. His name was Mark Flannery. He's over with Steve Cohen buying New York Mets bodies at 0.72. You guys own the high ground. I don't think a lot of people know this. What does the subsets you have of energy tell you about the great energy bet in the stock market?
Well, I mean, and we're talking, it's interesting. If you look at U.S. energy company or North American energy, you have each of the pieces separately. So you have companies that do refining and companies who do distribution and E&P. If you're looking at the big majors in Europe, they're just big fat oil companies, and you have less of that granularity that you see that you
his
in the
next
US.
trip to Paris is going to be great. I'm here with the big fat oil companies.
No, listen, you have the same thing in the U.S. with our big integrateds, but we have a lot of, and you can see that those refining businesses are just levitating on lack of refining capacity, and nobody's putting it in. So if you do have oil lift off, and then you actually get some upside in the more commodity-sensitive stuff like the E&P name and the service names, the sector is going to be a really big surprise. It's absolutely our top pick. The second area, at least we're talking about, is the consumer. Just think about what's going on. Their wages are staying higher, and the inflation on the things they're buying is falling, and there's an abundance of jobs. Right. Consumer confidence, and we've seen this now since June and July, the consumer confidence data is ripping, and people aren't appreciating that the consumer is going to spend a lot more money. It's going to keep us out of recession,